Welcome to ShortView Trading. This is your morning market hit for Wednesday, 17th of March. What matters today for traders? At a headline index level, equity markets were pretty muted yesterday. Most indices either closing higher or lower, but really only by a modest amount. Looking within sectors though, there was a pretty marked rotation out of cyclicals, which have been the key source of leadership in recent weeks and months, and back into tech. Have a look at the Philly stocks, for example, a tech-centric index which closed up 1.3% and above its 50-day moving average. Whereas the cyclically sensitive sectors closed lower. Energy, for example, was down 2.8% on the day after delivering very strong gains in recent months. While the Russell 2000, a key cyclically orientated index, was down 1.6%, having also delivered relatively strong gains in recent weeks and months. So there's been a bit of give back in the cyclically sensitive parts of the equity market, which is not surprising given that we've had sell signals from a number of our key short-term proprietary trading models. This one, for example, is our technical scoring system for the Russell 2000. You can see it was recently generating a buy signal, and then earlier this week it flipped back to sell, and in recent months it's been timely in flagging up the key turning points in the index. We have a number of trading tools like this one that we use to make a 1 to 2 week recommendation, long or short, on US equity futures. We update the view and we publish all the models in our daily trading publication available on our website. Have a look. We offer a 7-day free trial, and as well as the technical model that I just showed you, we also measure risk appetite in markets around the world every day. This is one of our risk appetite models. It's been useful in signaling key turning points in equity markets. So the key near-term question is whether yesterday's outperformance in the tech and growth areas of the market, like in the Nasdaq, will persist. Largely, of course, the answer depends on the near-term direction of 10-year bond yields. On top of that, though, we're closely watching price action in the Nasdaq. That bears watching closely. Interestingly, it rallied up to and tested its key Fibonacci retracement level yesterday, a 61.8% retracement of its losses from mid-Feb to early March. It failed at that level, and it's now failed there 3 times. So how are we trading it, and what do our Nasdaq specific models say? Have a look at our daily trading publication for detail on all of that. It's on our website. What are we watching today? Well, in terms of macro data out of the US, we get housing starts and building permits. In terms of events, all eyes on the Fed. 6 p.m. is the statement and policy decision. 6:30 is the press conference led by Powell. Will he talk about containing bond yields? That's, of course, a key question, something the ECB were talking about last week, and of course it's key for market direction in the near term. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn, and or Facebook. Thanks for listening.